I'm going to go over it and I'll show you guys why I called the trade. And this is exactly how we trade every single time, right? So please take your time to take some notes and feel free to stop me at any given time to ask questions as well, right? As you guys may know by now, I always start my analysis on the high time frame, which is the highest time frame when it comes to MT4 at least, because on TradingView there's 2 months, 4 months, and so on and so on. But on MT4, the highest time frame is the 1 month, which is the monthly time frame, right? So the monthly time frame, guys, all I do is right, I'm going to place my key SNR levels, which is support and resistance levels, right? I'm going to place one, right? There we go. We have many touches there, and I'm going to place one at the very top as well. Or if you want to as well, you can even place it all the way down there because we have a lot of touches down there, right? And then all you have to do is place the key external levels, as in where you have the most amount of touches. And also, as you guys can see, we have more touches all the way up there as well. If you want, you can even place one um, all the way up. There we go. A monthly time frame. That's all you have to do in the monthly time frame, right? So now we're going to scale down to the weekly time frame to see what's going on. As you can see on the weekly time frame, the market was trending up, trending up, trending up, trending up, and then started trending down, right? So it is kind of tricky to tell the trend on the weekly time frame, but as you scale down to the daily time frame, you'll be able to see if there was a break and a retest of a trend, right? But overall, right, overall, if you zoom all the way out, if you zoom all the way out, overall it is pretty much still an uptrend overall, right? So, now we're going to scale down to the daily time frame. On daily time frame, guys, this is where you're going to zoom in, right? This is where you're going to be spending the most amount of time for you to take your time to properly do your technical analysis, right? Because yes, I do swing trade from time to time, but I've never held any trade for more than I'd say 1 week and a half or 2 weeks, right? So the daily time frame, that's where you should be paying the most attention to, right? But the key thing is you place your key SNR levels to the monthly time frame, you go to the weekly time frame to see the overall trend, and then you go to the daily time frame to also see the trend as well, right? But you must make sure the daily trend aligns with the weekly trend. As you guys can see, AUD CAD was on a heavy downtrend, trending down, trending down, trending down. And on a downtrend, guys, you should be getting something called lower lows and lower highs, right? So you're going to draw our key structures. You have the high, right? You have a low, and then you have a lower high. Your main job to do on a downtrend is to wait for the market to retrace to keep on creating those lower highs for you to sell it, right? So we're going to place a lower low, right? You place your key structures on the daily. You have a lower high, right? And you keep doing it over and over again, right? You have a lower low again. You have a lower high, right? You have a high, you have a low. This is a lower high because this guy is lower than the previous high, right? And you have a lower low because this low is lower than the previous low, and so on and so on, right? This is a lower low as well. Most recent lower high that was created on a daily. So now you have to ask yourself, right? Obviously, the market was on a downtrend. You'd be looking to play sales only in that counter trade and not look for buys. But if you do grab your trend line, as you can see, right? If you do grab your trend line, right? Grab your trend line nicely, right? As you can see, the market was, let me make sure I have all the touches. There we go. To get this one as well. As you can see, the market was on a heavy downtrend, right? For like many days and even weeks, right? Touch went all the way down, 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 right? The minute you guys the market break above the downtrend, you should no longer be looking for sales, right? So the next move should be, hey, you know what? Since the market is no longer trending down, right? I'm going to be looking for buy and I'm going to wait for the market to create the next structure on an uptrend for me to get in, right? So if the market is going to go on an uptrend, guys, what kind of structure should we be getting on an uptrend?
Highs and lows,
Can I say it again?
highs and lows, higher highs and higher lows.
Perfect. Yeah, you should be getting higher highs and higher lows. Heavy downtrend, right? So we know on a downtrend you get lower lows and lower highs, right? And you should be looking to sell only at the lower highs, right? We're not interested in buying. We're only selling at the lower highs, right? You must trade with the trend at all times, right? That's one of the key when it comes to using the strategy, right? We never counter trade, right? So so now you have a lower high, lower low, sorry, lower low, lower high, lower low again, and lower highs, right? So now the minute the market breaks and retests the downtrend, you should no longer be looking for for sales. You should be looking for buys, right? So now your next step is, right? This guy became a low, right? Let me get rid of this. Right. This guy became a low. The market went all the way up to create a high, right? And then you're not buying yet. You're not buying. You're not buying. You're not buying because you must wait for the market to come back to you to create something called a higher low for you to buy it, right? We do not buy at a break and a retest, and obviously we do not buy when the market is too high, right? You must wait for the market to retrace to create some type of a higher low for you to get in, right? So now you might ask yourself, how do you know when the market is going to create the higher low, right? That's a great question, right? So the next step is to use the Fibonacci tool retracement, right? Because the Fibonacci tool retracement is going to precisely tell you when to get in, right? So now what you have to do is go to insert, fib, fib retracement. You're gonna have to grab your fib retracement, right? If you're looking for a buy, you're always going to start at the very bottom, right? So you're going to place your fib from the low all the way to the high. Then you're going to wait for the market to go for the 61% right? To give you as many touches, because the more touches you have at the 61%, the better it is, right? So you're going to pretty much wait for the market to create some type of support at the 61% for you to buy, right? Remember, the market is no longer trending down, so you're no longer looking for sales. You should be looking for buys, right? So now when do you know when to get in? You have to wait for the market to create some type of structure called higher low, right? And then you have to use a Fibonacci retracement, which is going to tell you precisely when to get in, right? So we're getting at the 61.8% level, but as soon as the market goes for the 61% level, let's see if you get one touch, right? Do not buy it yet, right? Because you need to wait for the market to create some type of support level for you to buy it at the 61% level, right? As you can see, we have one, two, three, four touches at the 61% level, right? So we can clearly call this a higher low, right? Higher low. So you have the low, high, higher low at the 61%. So you should be looking to buy, right? So your next move is, and the next thing that's going to come after is a higher low. And usually the higher low is going to be created at the 61%. Sometimes you might see it at the 50%, but 61% is a sweet spot, right? And also, as they also told you guys, right? If you look on the left side, to the left side, you're going to see the previous structure, right? This was a previous lower high, right? Previous lower high. And then this is where the support is usually going to be created at, as you can see, right? So, but I'm going to go step by step to show you guys everything, right? So we are on a daily time frame. We know the daily aligns with the weekly trend. Place our key SNR levels on the monthly, and we know we have the Fibonacci going on a daily as well. So now all we have to do is scale down to get a proper entry price, right? I'm going to scale down to the H4 time frame to see what's going on. If you zoom all the way out, sorry, on the H4 time frame, right, you still have the low, have the high, and the market drop to the 61%, right? And I want you guys to realize one thing, right? The minute the market goes for the 61%, then the main thing you should be looking for is for sellers to lose momentum. And this is why I always tell you guys, right? Do not place it by as soon as the market gives you one touch at the 61%, right? You must wait for sellers to lose momentum, as in, right? You're going to see the market dropping, right? With a lot of sellers selling it, of course, right? Red candlesticks, red candlesticks, red candlesticks. But guess what? The minute the market is at getting closer to the 61%, as you can see, the red candlesticks are getting smaller and buyers are starting to come in. Buyers are starting to come in. Then now buyers are taking over, right? Buyers are taking over and the buyers took over, right? And so on, right? Sellers are in control. But the minute it goes for the 61%, guess what happened? Buyers are pushing the market all the way up, right? So if you let's say if you're waiting to buy AUD card at the 61.8%, right? But if you see the market is giving you huge bearish engulfing, meaning huge red candlesticks at the 61.8%, there is a high chance that the market is going to keep on selling, right? So that is why I'm telling you guys it is very crucial, right? To pay attention to the candlestick patterns as well, right? You have to see sellers are losing momentum the minute the market is going for the 50 or the 61%, right? Sellers are in control, sellers are in control, sellers are in control, and so on. Buyers are coming in, and buyers pretty much took over with that bullish engulfing and so on and so on. Same here, right? Sellers are in control, sellers are in control, and buyers are pushing the market up. That's what you must see at the 61%, right? It's not like the mid market goes for the 61%, buy it right away, right? It doesn't work like that because if you do that, I'm telling you, you're going to take a lot of losses, right? So that's what I look for in the forward time frame. The forward time frame, right? I'm just watching the forward time frame in making sure that sellers are no longer in control and sellers are losing momentum, right? Because you need buyers to gain momentum for you to buy it so you can potentially make money, right? If that makes sense, right? And also one thing that Zay mentioned as well, right? You must wait for the market to create some type of support at the 61%, and you always have to look to the left, right? To the left side, you're going to see if you draw a support level, right? This was a solid support level as well, right? On the left side, right? And this was a previous lower high, right? Previous lower high because right, the market was giving you lower lows and lower highs and so on and so on and so on. Right now, as you can see, the market went all the way down to create, right? A higher low now at the 61% level, right? So there is a lot that goes into it. Yes, we know, we'll be looking to sell at the 61% or buy at the 61% if the market is giving you lower highs and higher lows. But at the same time, guys, you must apply all the confluences, right? You must wait for sellers to lose momentum for you to buy it. Right. If you're looking for a sell, you must wait for buyers to lose momentum for you to sell it. With the CJ trade that Zay called, right? If you go to the 4 hour time frame, the 1 hour time frame, you'll see as soon as the market goes for the 61% level before they call the trade, there was a huge bearish engulfing, right? Candlestick. I'm telling you that, hey, you know what? Buyers are no longer in control. Now it is a good time to sell, right? You must wait for sellers to lose momentum at the 61% if you're looking for a buy, right? And then some of you guys, might still be trading W's or M's. I'm not sure if my guy Ramon is on the call because he likes his M's and W's. And as you can see at the 61% level as well, you're
W's
getting a nice.
and M's all day, me.
Raymond, did you say something?
I said M's and W's all day, every day.
So as you can see at the 61% level, it is creating a nice W as well, right? You must be able to, use all the confluences, right? The more confluences you have, the better it is for you, right? So this is the AUD card. We're on the 4 hour time frame. Right, so all you have to do is after you place your fib from the daily time frame, you scale down to the 4 hour time frame to make sure that sellers are losing momentum and that buyers are in control. As you can see, buyers are slowly taking over right now, right? And then, there's a clear double bottom going on, which is a W shape as well. So now we're going to scale down to the 1 hour time frame to pretty much place your entry price, right? So let's say if you're waiting to place your entry at the 1 hour, right? You know that the market is rejecting the 61, rejecting the 61 and the minute you see the market, right, give you this guy right here, right? Then went up to give you this guy, and then you could have placed a buy, right? Place your stop loss, right? Do not place your stop loss like very tight to the wick. Give it at least like, I'd say 50 pips below the structure, right? 50 pips below this guy. And somewhere around this area, probably, right? So you place your stop loss about 50 pips below the 61% level, and then your take profit is going to be, let me go into the daily time frame, right? So if you bang at the 61, right? The take profit is going to be at the first TP should be at the 0% level, right? This is where the previous structure was, the previous high. And if the market is actually going to be trending up, guys, you always going to get something higher than the previous high for it to create a higher high. This is why Zay now we use the minus 27% for TP2, right? So this is going to be TP1, and then this should be your final TP, right? On the left side is the same situation, right? If the market is actually trending down, you're always going to get something lower than the previous low, right? You have a low and you have a lower high, you have a lower high, and so on and so on, right? Let's say if you're selling AUD CAD, right? You grab your fib, right? Place it from here, right, all the way down, right? As you can see, the market went for the 61% level, right? Right? The market went for the 61% level. You place your sell, right? And you place your stop loss about 50 pips above the previous structure, right? 50 pips probably somewhere in this area, right? Guess what? You would have made a lot of money, right? Place your sell and dropped all the way down to smash your TP1 at the 0%, and then minus 27%. That's where the TP2 is always going to be at, right? Guess what happened? The mid market goes for the minus 27%. It is going to react. It is going to go up to create the next lower high for you to keep on selling it, right? Very, very, very easy the way we trade, guys. Right? So we're pretty much expecting the same thing to happen here, right? We have the low, you have the high, you have the high low, right? And you wait for sellers to lose momentum on the 4 hour time frame, right? You place your buy, right? Stop loss about 50 pips below the 61% level, right? Below that support level. And then TP1 is going to be at the 0%. That's where the previous high, the previous structure was. And TP2 is going to be at the minus 27%. And minus 27% is where the next lower high on the left side was as well, as you can see, right? For you to be able to use the strategy, like Zay said, man, you must be extremely patient, right? Because once you know what you're looking for, there's no need for you to be sitting in front of the computer 24/7, right? So what Zay does, right? He'll be placing notifications at the 61% level or at the 50% level. And the minute he gets that notification, then that's when he goes and take a look and see if in this scenario for AUD CAD, right? He'll go to the 4 hour time frame and take a look and see if sellers are losing momentum at the 61% level, right? For him to call the buy, right? And so on and so on. On the 1 hour time frame, you can properly zoom in to see the touches at the 61% level, right? You place your buy, stop loss 50 pips below this guy, and take profit should be at the TP1 should be at the 0%, right? And TP2 should be at the minus 27%. You guys have any questions?